Hey, what's going on, guys? I'm just gonna go over my bigger macro count here. Um, I have this as a very long, just WXY. um, you can see we had the massive run up here. I have this as ABC for the W and um, ABC or WXY for the X. Uh, ABC for the A, B, C, and I'm actually going to now switch to the hourly. Also, I have this arrow drawn here for a reason. I'll get to that in a minute, but I switched now down to the 1 hour, and it's basically the same. This is really the count that I really like, and it's this symmetrical triangle, and it just makes so much sense. Um, very likely to have a triangle in the fourth wave, um, and that's what this looks like. I mean, you've got three, you've got three down, three up, um, which would be an A, B, C, D, E, and the E is always the failure leg, as most of you guys know. But one of the things that I had in the last video, um, I actually had this C more likely to be completed down in this area at about 38.50. So we overshot a little bit here. And what's interesting is last night I did not post this, but I actually changed this and did move this higher before this happened. Just based on the idea, not so much technical analysis, but just more of like a gut feeling that too many people are looking at this 38.50 area. And, anytime that everyone is looking in the same area, we either never get there or we blow right past it. So, we blew right past it. And one of the interesting, I had this top to the dollar so far. And it's quite possible that we are not done yet, believe it or not, that we may still even push a little bit higher. But I want to go into exactly, why. I mean, it's not that I was right or, to the dollar. It's just basically I pulled this fib level here, which if you notice, I use this high because what I said to myself was everyone is expecting the target over here at 38.50, and that is the golden zone or the 618 to the 65% retracement of this swing high, from this swing low to this swing high. And I actually moved it here to just more on a gut feeling. And I mean, look at this. You can't, now mind you, this is the 65%. As I always talk about, this is what the bots and the algorithms trade. Now we did break this the first time, which if you're a bear and you're shorting, this is problematic, because this is dangerous, because we did break this on this kind of dead cat bounce here. That I'm calling it a dead cat, and I'll tell you why. If you guys have seen my other videos, you know why I'm calling it a dead cat bounce. But this is problematic if you are shorting or if you're a bear or whatever, because we did break the 65. So the bots and the algorithms will now try to get to the next 65. That's just the way that they're programmed. But anyway, without going too far into that, if you notice this 65 here, I mean, look at this, look at where we topped here. I mean, look at this. You can't, I can't zoom in far enough to make this not reach this point. So, you know, that's not a coincidence. You know, one of the things that I always say is that it's not really the whales that are moving the price. It's more the bots, because I think cryptocurrency, and this is just my opinion, and I think somebody should do some type of volume analysis that's really good with, you know, I don't even know how you would do this, but I think that I would even say 65% to 70% of the trading volume in cryptocurrency is bots. And you can see that. I mean, this is bots. And also, I mean, there's people that know how the bots are programmed, so they're also going to buy and sell in the same areas. But anyways, this was not coincidence here. And I did on my last video with this same triangle count. Like I said, I had the target here a little bit lower at about 38.50. And I did say that there is a very strong possibility of a fake out to break this trend line here, which I'll draw real quick because I have moved it now. I'll make it darker in a minute, but this trend line was here. Let's make it a big color so you guys can see it. Okay, this trend line was here before this breakout, obviously. So I was explaining to you guys that in order for this triangle to be invalidated, and this was actually my mistake, I misspoke on the video. I said that it cannot break this B here, and that is in fact not correct. It cannot break this A. It can break this B and still be valid. So, you know, the fake out possibility can go, you know, all the way up here for this. I mean, it's unlikely for this count to still be valid with a fake out up here, but you know, needless to say, it's still technically valid, even if we do push higher up to here. Now, if we go up here, forget it. This triangle is no longer valid, and there's another account that is valid that I have been talking about, which would be the A B C for that 4700 area that I've been talking about. But as far as now, I really like this count. It's just so technical, and you know, one of the things is also, if you notice, you know, I'm sure a lot of people are bullish now, and it's actually unfortunate because, in my opinion, this is going to end in serious blood. This is going to be bad. But I mean, if you're just looking at this and you're just, you know, a casual trader, and you're looking at this, you would have this as a wedge, or a symmetrical triangle. You know, what is there there's really nothing to be bullish about here. It's lower low, the lower low of the, you know, the past year and a half, basically. Lower high, lower low from this low. So we have lower high. We did have a higher low in this push up. We have lower high, lower low, lower high. So, you know, I mean, if you're looking at this as a trend change, you know, we're not even anywhere. We can't even, that's not even in the discussion, as far as I'm concerned. And there is no bullish count. There's absolutely no bullish count. Even the bullish count ends in bearishness. And this, like I've been saying forever now, this low, it's just, it's like less than a 10% chance that this is the end of this bear market. So I know that some of you guys don't really care because you're traders and this is more macro stuff. But when you're Elliott wave trading, you really have to know I mean, this is obvious. Forgive me, guys. A lot of you guys know this stuff, but you really have to know the bigger picture in order to properly break down the smaller time frames. So, this stuff is extremely important. But if this count is to play out, this would be the 4 of 5 that will actually just zoom back out here real quick. And again, I mean, as you can see, this is a symmetrical triangle. This would be a bear flag, basically. I mean, this is a humongous bear flag. And I have this as, let's see here, go up here, W, X, Y. This would be the 4. This gets confusing, but this would be 1, 2, 3, 4. This triangle is, I don't know if you could see it from here, but this would be the 4 of the 5 of the C of the Y. And this would be the first target I would have would be 2,400. The second target would be as far down as 1,800. So, and that's basically, if this count is going to play out, which, geez, as of now, I mean, it's so technical. It's almost like it's like too perfect. But the reason that I think that this is so technical and this is just playing out beautifully is that, like it brings to my point from before, is that I think the majority of the trading volume is bots in cryptocurrency, and especially I think when human volume leaves, especially during a bear market where sideways, we're boring. There's even more the percentage or the ratio is even more so with bots. So anytime you have a ton of bots in a market, you're going to have these extremely technical pivots like this because, that's just what they're programmed to do. So I could see, and I want you guys to be prepared for another fake out, for another move up here. I think it's unlikely, but it's definitely not out of the realm of possibility here. The other thing, real quick, this is pretty easy to do. I can just remove this. I'm going to remove the triangle, and we could have, this is the other scenario here, is that we have a very, well, it would actually, yeah, it would be an ABC. So we would have an A, B, and we're going up for the C. Now, it's possible for us to get a truncated C, or it just really wouldn't constitute as a flat correction, but this C would have to be, in my opinion, your target's up here. But from a trader's perspective, I would not long this. Yeah, there's a lot of room, but this, in my opinion, is just more a shorting opportunity than this is a long opportunity, because you still have this triangle to contend with. So, it's just, you guys know what you're doing as far as that. But yeah, this is extremely technical, and man, it's hard to disprove this count. It really is. So, and okay, let me go back to where I had okay, I have this arrow here because This arrow was November 14th, 2018. We went from 62.50 to 30, I don't know, 30, but the low, 31.50, 31.80, whatever the low was. So we got chopped about 52% in 2 weeks from November 14th. Now, I'm going to go over to the short chart. And the last time the shorts were this low on, now mind you, this is Bitfinex. I know that BitMEX is different, but was November 14th. We dropped 52% in 2 weeks the last time shorts were this low. So this is something, you know, really to pay attention to. I also have this as a very strong support for the shorts at around 17,400, we'll call it. But, you know, charting shorts and longs can be also very tricky, because if you wanted to create a short squeeze right now, you know, a lot of people, not a lot of people, but there's a misconception that you would get a short squeeze when the shorts are really high, and you would liquidate them, and that's how you would push the price up, which is, you know, it is very true. But at the same time, look at the potential here, because if the shorts basically have capitulated here, but at the same time, if you wanted to create a short squeeze now, the price could start pushing up as more and more and more shorts come in, and then they capitulate again. So it's very tricky. But as far as that, I mean, look, just plain and simple, the last time the shorts were this low, we dropped 52% in 2 weeks here. Sorry. So that's, you know, that's something to be cautious of. They're going long now, you're really playing with fire. If you're in a long position and you haven't taken profit, I think you're really, really playing with fire at this point. All the indicators are oversold. Bit stamp here. So, you know, that's why I have this marked here. So the other thing is that this will be a big, actually it'll be here. This will be a big algorithm target, 28.41. This will be a secondary target at 23.94 to say 23.80 or so. So, you know, that's about it. As far as my trades, I actually made 83% today shorting that 65 that I had labeled. And I saw the push up, and a part of me wanted to jump in short, but I said, you know what, let me just wait here, because I feel like this is going to be a bigger fake out even than what most people expect. So I waited, and then once I saw that we were going to hit that 65, which was, let me put it back, which was here, right here at the so far at the top. I put a short order in at 50 times, and I mean, my stop loss was $7 above the 65, because I say, hey, if we're going to break the 65, we're going to push even higher. So, you know, so easy trade as far as that. You know, I closed my trade here. Right about here. Right about there. We got to the bottom. I tried to get out of the trade. But we started pushing up really quickly, and I just exited, because in this market, I'm not going to leave that kind of money on the table, 80 to 83, 84%. So, you know, but that was just, that's an easy trade. I mean, um, but as of right now, I don't want to be in a part of any trade. If I was going to be forced to trade right now, I would short, but I am still expecting another fake out up here. I really am. Um, and it's not anything. It's not anything from technicals. It's just more of my gut feeling that I think we are still going to have another big fake out up here, and part of that is actually technical, because if you look at this, if you look at the volume, and I know volume, it can be very, volume is very, it's not as cut and dry as many people think, but if you look at this volume, the pullbacks or the red candles have lower volume than the green candles. That's bullish. That has a lot of bullish bias to it. And what I'm also noticing is instead of pulling back right now, we're just hanging here. And to me, the longer we hang here and don't start coming down, I think the more likely it is that we make another fake out push up. So for me, it's not worth the reward. I mean, what's the rush? Why run and jump into a trade? Take the high probability trades. Don't just trade because you're bored, or because a lot of times I notice that people will trade right after a big move because it's like, oh my god, I got to do something. There's just no reason for that. So one of the things that is very difficult when it comes to trading is there. I know brilliant people that are spot on with technical analysis, and they're terrible traders. And I know people that are not the greatest at technical analysis that are fantastic traders. So, they're two entirely different skill sets. And to be honest with you, technical analysis is the easier a skill to master than trading. But anyway, that's something for another day. But yeah, right now it's what I have. We'll see what this triangle does here, and we'll see if the other count plays out. But like I said, guys, there is no count that does not break this low. None. Could it happen? Sure, it could happen. Anything could happen. Meteors could strike the earth tomorrow and we could all be dead. So, am I betting on that? No. But so that's kind of my macro. It's my short version of my macro analysis, and this is my short term. So, yeah, nothing's really changed. This breaks here, and triangle's invalid, and this ABC A B up for the C up here is more likely to play out. In any event, if we do break this, this is just an opportunity to ladder in shorts, in my opinion. So just great risk reward here. I mean, there's been no retracement. Where is the retracement? None. And the other part of this, without making these, I don't want to make these videos too long, but another part of this is, let's talk about these BART patterns that everyone's talking about. You can call them high frequency trading, wash trading. Wash trading is basically you're buying and selling your own dips and your own pumps. So to make it look like there's a lot of volume. And the reason you do that is because volume attracts other volume, and it's a way of generating or engineering liquidity in a market that does not have enough liquidity for you to enter your trades without being noticed. As I talked about last time, whales are the whale's whole purpose is to enter and exit without being detected. That is their whole purpose. And a way to do that is to generate liquidity. So without getting too far into that, if you look at this, this looks like one hell of an inverse BART pattern, as everyone calls them, which would do something like this before doing this. So, I don't pay too much attention to these BART patterns, but it's just one other thing I wanted to cover really quickly. The other thing that with these BART patterns is you'll see very often there will be no substantial retracement for a very, very long time. You see it on the moves up, you see it on the moves down. So, and that's just a way to trap people. But yeah, that's what I have for now. This to me looks like we're gonna do this. Just kind of flatten out, let all the indicators reset before doing this. So, am I betting on that? No, but it would not surprise me. And in fact, I hope that happens, because that will give me a better entry to short. Expecting this move here, because either count that we have, we should be coming back in this area. So, unless we break this, and in that case, I will start laddering shorts in this area. So that's kind of my plan for right now. I'm just waiting this out. There's no reason to be trading this. If you're going long now, I think you need your head examined. But, hey, you could be rewarded. I could be wrong, and we could do this in the next hour. So, markets, markets don't care about people's opinions. But as far as possibilities and probabilities, you're really, really playing with fire. So, with that being said, I'll wrap this up. And if you guys like the content, subscribe. I appreciate it. If you feel free to share the videos. Any input is appreciated and respected. So good luck, guys, and I'll talk to you next time.